The media stopped telling us that there's a problem with the banks, so we stopped thinking there was a problem with the banks. We look at the reserves. The Federal Deposit Insurance Corporation that's over your CDs and your banking products, your money markets, they have roughly 1% coverage. Make sure you make your way to fdic.gov and look that up. The DIF, that Deposit Insurance Fund, it is broke. If you're Mark Cuban, you'll get your 5 to 7 million. If you are Anthony Correa, you probably will not. So this world is nothing but the haves versus the have-nots, and it ain't getting better. What does George Carlin say? It's a big club, and you ain't in it. It's not so much about being debt-free. It's getting it out of the bank. Paying off your credit card. You got 10 grand in credit card debt, and you've got 15 grand in the bank. And I'm like, why don't you take 10 of that grands and pay off that credit card debt? And they're like, well, no, because what if I have an emergency? So it's called repositioning assets for a better result. My father used to say repositioning assets for a more favorable result. Well, so you're just trying to move money around. Nah, if it betters your situation, all day long, of course. Your big thing is income over assets. My big thing is dig a spider hole in your backyard because they're all coming to get us. My mom used to say, and I know she stole it from somebody, she's just because you're paranoid doesn't mean they're not out to get you. So I'm always worried that things are going to get chaotic. You are more worried about normal planning.
Right now, we're taught to accumulate assets. So you spend your whole life income. You're not living off your assets. Now you're going to retire, can try to live that life of leisure. And now you're responsible for not running out of your assets. So it's a complete 180 from what you've done your entire working career. And when we made the switch to 401ks over pensions, it wasn't for your benefit. It was forcing you to pay for your retirement so the companies didn't have to fit the bill anymore. Because if you have income, you can pay for mistakes. If you're living off assets and you make a mistake and you cut your portfolio in half, well, what are the odds that you're going to run out of money now? How can you maintain your lifestyle through death? Do you have any idea? You don't. You have nothing to count on. So we're really big on self-funding your own pensions. If you have a lot of savings and not enough income, you spend down your savings. If you have a lot of income and not enough savings, you build up your savings. We handle finances for people on a true fixed income who very strict budgets, barely getting by, and we've got multimillionaires. And the people that are happiest in retirement have excess income. They're not always millionaires. They're not always very wealthy, but what they do is they've got pensions that they can count on.